What happens when you have one of the world's largest central banks buying gold once again? In today's video, we take a look at that along with the latest inflation report out from the US. Is it good or is it bad? Dark pool activity was starting to rise up in some of the key sectors that we need to discuss. Meanwhile, Tesla seems to be squeezing Bill Gates' short position. Yes, I wouldn't be on the wrong side of this trade. And in today's video, we take a look at the options walls. But it wasn't just that, it was also dark pool activity coming in across many different pairs. And in today's video, we'll break down the good, the bad, and the ugly for stocks, commodities, and cryptos. Join us, everyone. This will be a great one. Well, welcome back, everybody, to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss together. The upside of semiconductors starting to move in the direction, some big dark pools coming through there, which are positive. And then, of course, Google, AI investment, quantum computing, and a few other things leading to a massive breakout over the last two sessions. But let's begin by discussing China and their central bank gold buying spree. Yes, they're back, and this is great for many viewers here on the channel. Basically, we've been looking for 3K for the last 12 months, and so far it's been so good. Little pullback recently. Well, it looks like the PBOC were pretty interested in that pullback, buying big in November and adding to the reserves. Now, the great sign about this is when they start to buy, they tend to buy for a sustained amount of months. And this could lead us into that number. So do you think we're going to get 3K over the next 6 months? Let us know in the comments down below. Let's also talk about investors because, yes, gold is one thing, but it looks like everybody has FOMO on the stock market. This is a great chart to really represent that FOMO. And the last time we saw FOMO like this was really 2021, with some huge trades that led on to, of course, a bit of a spike in the market and then eventually a sell-off in 2022. Now, 140 billion is no joke, and a lot of this is coming in you're guessing it, ETFs, but on top of ETFs, they're leveraged ones. So it looks like every single retail trader is starting to get a bit of leverage appetite, leading into a bit of a concern when you start to look at inflation figures and where we are in terms of this now bull cycle that's lasted a bit of over 2 years. Now, we've already looked at some of the stats that kind of point us to maybe the late half of 2025 being a bit shaky. Obviously, we'll be updating on the channel. So if it's your first time here, make sure to subscribe. We do have a bunch of lead indicators that we look at. But let's talk inflation for a moment because auto insurance and insurances in general seem to be where the problems are. Take a look at this. I mean, I would be in a lot of pain for a lot of people, I feel. 12.7% auto insurance increase. I've heard about home insurance, especially down in Florida, being absolutely diabolical when it comes to the US. And you can see here that there is still a lot of service sticky inflation. Rents also being a problem in the economy. And while, yes, it's cheaper to buy electronics, used cars, and gasoline, it's just really expensive to buy some of these services. Here's a great chart from Duality Research that basically shows you all of the different kind of spikes and spike downs. And again, you'll notice it's the services that tend to see these big upticks. And the problem with these is a lot of them are very much the type of thing that can't get rid of very quickly in the economy. So this is a bit of an issue. It's going to be a topic in 2025. And of course, we have seen a spike in certain metals markets as well leading into this. Weight-wise, you can see the contribution now is car insurance, rent, hospital, and of course OER making 50.3. But effectively, when we look at this core, you can see the rent is a big component and car insurance has been a big part of it as well. Let's talk S&P 500 for a moment. We've been discussing a lot about advanced declining stocks, but we've also been talking about how there's usually more to come. Now, Jason Gottfried over on X actually shares this data, and he says that we've only ever seen more declining than advancing stocks on the S&P 500 for 7 straight days a few times before when it's close to its peak. And usually, in all cases, there's more to come. So again, should you be bearish over this particular stat? Well, the answer seems to be no. In fact, there is more to come. But should you be cautious in the future? Well, again, only a couple of reads, but certainly would want to be a little bit cautious leading into 2025. Now, why are a lot of people bullish? Well, of course, it's the Santa Claus rally. Now, will that happen in 2024? Well, generally, the stats kind of don't lie. Technically, yes, it should. And usually, it's actually driven by something like the Russell 2000, which we'll look at later on the charts. But S&P 500 seasonality, such as this one created by Grant Hawkridge, shows that theoretically, we're about the point now where you start to see the market tick towards the upside. Maybe a little bit of selling around here, but as we've seen before, the options put walls have been so strong. As soon as the market goes down even a little bit, people just stack puts, and that acts as a put wall. And as we saw just even over the last 24 hours, it didn't even bother to get to 6K. So many puts stacked between kind of like that 60.50 to 6,000. And the market just went, you know what? I'm going in the opposite direction. Bye, bye, bye. Let's talk Bitcoin for a moment and the crypto markets. We know that, of course, we still expect crypto to perform well into 2025 based on historical stats around elections. We've seen phase one, which is obviously Bitcoin doing really well. We're starting to see Ethereum come through in large caps. Alt season still to start. And that's the normal way of it. Remember, we're looking for the money flow. And we did start to see the money flow last week. Ethereum, it was the standout. Huge flows into Ethereum, pushing us up to a very exceptional close above 4,000. And that, of course, makes us quite bullish into the future. These dips, these pullbacks that have been happening recently, liquidated something like $2 billion worth of leveraged funds. And a lot of people, unfortunately, got hurt in that. I hope you were not one of them. But even if you were, of course, take it as a lesson. If everyone's getting hyped and you're hearing it in the street and everyone's talking about crypto, it's usually time to say, maybe I shouldn't be in this much leverage at these stages. Now, do we see some good signs? Well, yes, Bitcoins off the exchanges are very, very good. This basically shows you there's a bunch of hodling inside of the Bitcoin community, which is a good thing. And of course, we still theoretically are running into what we would call a seasonal trend. Generally, December is okay for Ethereum, but it's Jan, Feb, March, April, and May that on, I guess you would say, general data perform much better. And this is the same thing we've seen whatever data sheets that we end up looking at. Generally speaking, the start of the next year usually is best. Now, what is one of the breakouts that we'll be looking at? We talked about dark pool activity recently in Bitcoin. It found the high as soon as it went to about 104K. Wall Street sold it down. Now, they've held it underneath that price in recent times. If we take 104 and make a new all-time high, that could be a big sign that the market is ready to go again, and Bitcoin might even push to that 110 or 120K kind of target. On top of all of this, we're seeing big moves across many different markets. Silver, in particular, showing some really good signs of life over the recent sessions, and we've been looking at that as a good price action kind of base target. But we also saw some big trades over the last 24 hours. A huge one coming in on treasuries. So straight after the CPI data, we saw US 10-year kind of spike a little bit. We saw treasuries go down, and it looks like probably a buy. And the only reason we can say probably a buy is because a lot of shares were traded here and it rallied up, and we've then come back down to around the same level, and we're seeing a large transaction going through. Now, we would like to see, of course, this confirmed by actual price action, but it's a good first sign that something's going on. Speaking of something that's going on, it looks like someone closed their short, and that's good. Now, this is a sweep. And whenever we see a dark pool sweep, it usually means we need to trade it now. So they saw that CPI number, whoever this was, and they said, let's bail, okay? Now, of course, they were probably pretty happy with their little short trade because it's been going up recently. But there's likelihood here that the too short NVDA position was actually closed, and this could also help bolster some of the things we've seen over the last week. Go back through our last 5 videos, we've been talking about semiconductors seeing a lot of leverage longs coming in. We've seen NVIDIA having a lot of leverage longs coming in as well, and probably what was a short being closed off. That bodes well potentially for the next couple of sessions. Let's now talk about S&P 500. Obviously, it moved up. We can see here that we're kind of expecting a sideways action for a little while here on markets to uptick coming into the end of the year. And so far, so good. Didn't come back to the daily 20. This is still an open level at around 6,000. Let's have a look at the futures. These are the updated options, high-low levels for the next session. You'll notice the option low actually comes in at yesterday's close low. So that's an interesting point for traders today. And 6,100 remains, of course, the major core wall. So I would say for index traders, it's not that interesting. It's probably better to be in single stocks at this stage and looking for the opportunities there because we're trapped between two tight zones, 6,000 on the bottom and 6,100 on the top. And you can really see this represented here in the options flow. Take a look at this options flow, 6,100. Wow, wow, wow. I mean, how many calls do you want stuck on one zone? This kind of reminds me of Tesla. You know, we looked at Tesla and all we saw was 400. Then we blitz 400. What happens? Bang, 430 pretty much. So very large move quickly. That's positive gamma in effect. We, at this stage, have not seen 6,100 break through, but just like 6,000, when it broke for the first time, we pushed towards 6,100 pretty quickly. If we break 6,100, well, you guessed it, we're probably going towards 6,200. Again, the puts seem to be kind of culminating around 60.50 and 6,000. So this seems to be kind of the bottoming of the market for now. And of course, the breakout would be 61 plus for those momentum-based traders out there or investors, like I'm sure a few of you are. What about NVIDIA? Well, 140 would be good. 148 would be fantastic. Of course, 150 break would be massive. Now, at this stage, it looks like most calls are sitting around 140, 142. We'll continue to watch this kind of space. Let's move over to Tesla. Absolutely ripped the 400. We know there are so many trades at 400. Now, if this market is squeezing someone like Bill Gates or whoever else it might be squeezing, if they start to liquidate, then of course it'll feed upon itself and keep pushing higher. We do see a little bit of a call wall starting to appear around 420. I wonder why. But overall, this is one of those things that you've got to look at and you've got to say, okay, am I on a run? Absolutely. Like we've said, don't worry about the fundamentals here. Don't worry about anything. All you care about, guys, is the relationship between Elon and Trump. That's really it. Because right now, that's what it's trading on. It's trading on the hype into how much could Elon win out of this US election. Remember, Tesla is in positive gamma, and therefore I wouldn't be necessarily terrified of the stock at this stage. And we've kind of maintained that since the election. It's really one of the better trades that's out there at this stage. A lot of funds also buying into Tesla over the recent kind of last 2 weeks, 3 weeks. So no wonder it's stacking upon itself. US 10-year, yeah, it rallied up a little bit, but nothing notable. So no real changes there. We saw, of course, treasuries come down, large transaction here. We could see treasuries go lower. I think it's possible to go and hit back into the 91s. Remember, I don't think treasuries, and we always talk about this, is a very good trade. So realistically, that's the type of thing that we look for more as a position base or an investment. The treasury is dropping down, large transaction coming through, which is kind of good. In terms of other things that could be worrying us about markets, bonds didn't really react too much to, of course, the inflation figures, which is a good news for most market traders. And the US market, that is the US dollar, failed to close high above 106.73. We had an alert at 106.70. I got it, and then there was just no close. I was looking very closely. Now, if that had happened and we'd actually seen this double bottom off, then of course we'd probably be looking at longs on the dollar. It just didn't manage to hold above it. So that's the importance of the close. That's the importance of thinking about flow. I'd say neutral on the dollar for now, and we'll see whether it actually breaks to the downside. Gold, as we mentioned, great sign for position-based traders, great sign for investors, guys. The central bankers, they're back in. Yeah, when China starts buying, they tend to kind of stack for a while. So that could be good for our 3K target. I know a lot of you in the comment section are like, oh, gold, man. Yeah, too much impatience, everyone. Come on. You've had a fantastic year. Gold has absolutely smashed it. So what have we seen? We've seen the 20 moving average here on the weekly getting hit. It found buyers there. I like that level. We like this level, and we like the price action so far. Of course, if gold is able to break through around 27.50 on the close, we would be very much thinking that we'll break to a new high and maybe we'll run towards 3K. And that will be certainly a celebration for, I'm sure, quite a few of you. But still, trend remains intact. Don't worry about it too much. It's chilling. It's all good. Let's move over to silver. Now, silver has been a pretty good trade, actually. Nice entries down here, part of our day trading masterclass, absolute replication in those areas. Also, gold was actually a day trading masterclass setup. So both of those have been quite nice in terms of replication. But we see a bit of strength. That's been good. A little bit of consolidation here at the supply. Obviously, we want to close above here. It's starting to get a little exhausted. But generally speaking, silver's still looking really good. And even if it pulls back to like 31, 31 would be where I'd like to see buyers come back in. In fact, if it did get there, nice reaction off 31 could be a nice little entry. Of course, proceed with your own risks and caution. Let's move over to US oil. Now, this could be showing us kind of the underlying. So we mentioned metals before around inflation. Oil tends to kind of like yields increasing. So in this case, yields increase a little bit. Oil kind of comes back. I don't think I'd be buying oil or anything. We can see here the downward trend that's kind of through it on the 50 exponential here on the blue line. But I do think that it's worth paying attention to oil. If oil breaks through 72 a barrel in the future, could that be telling us inflation is coming back? And maybe the concerns of the market could actually start to spill over into price. I'm sure a lot of you are wondering, How come we're getting this higher CPI number? It looks worrying. The Fed's talking about cutting. Isn't that going to cause more inflation? Yeah, probably. They don't care. They can't pay the debts. Let's be real. They're just trying to get that thing down so they can pay it off in terms of the debt, or at least maintain it. So there are powerful forces at work, and ultimately, the chance of reinflation in 25 actually is pretty high. So, of course, the market hasn't reacted to it. You're probably correct. But remember, the market can stay kind of like completely random compared to your logical thought process. Follow the trends, follow the flows, and when it moves, then of course you will move with it. Now, in this case, Tesla is absolutely exploding. I'd say it hasn't finished yet necessarily. So, of course, we'll be watching that. Another stock that gets brought up all the time from the election has been PLTR. Now, to me, PLTR looks a little bit more dodgy. So this one here has actually dropped considerably over 3 days. Now, you'll notice there's buyers here. I don't think I'd be a buyer at this level. Now, I can understand why you buy the dip and you say, how good is this dip? But to see that seller come through on the 9th of December, that's not a great sign. So I would say sideways, low react. I don't really think the 100 is going to happen on PLTR just yet. So I would say this is a worrying sign for that stock. We just haven't seen that in Tesla. Let's move over to NVDA. Nice buy. Good. That's good. Right around the zone right now that we saw that large dark pool just a week ago. So that's a positive sign. And obviously semiconductors actually replicating off the low there and starting to find buyers. Love to see these continue to find buyers over the next week or two. Now, the big winner of the last kind of 48 hours has been Google. Big announcements, pretty impressive stuff if you're thinking about it, and a huge breakout. So this was the cheapest of the Mag 6 stocks on paper, and now it's broken to a new high. So it's obviously running momentum. If you managed to pick that up or you bought it off that inverse head and shoulders we talked about a little while ago, congrats to you. Very nice. And I don't know if I dumped that. I think that looks pretty good. China stocks chilling around the 61.8 fib. Let's find a bid here. Not losing faith in them or anything like that, guys. Just waiting for the bid to come back through. So if you're holding, it seems to look okay. US 2K, yeah, nothing much. But when it goes, we've got an alert for it. And of course, we will be watching. So we'll update that one worthwhile. And NASDAQ actually making a new high thanks to probably Google and the semiconductor rally there. So yeah, it still looks like it's a bit overbought. I still would say, maybe this kind of thing for a little while. But that being said, would I get rid of it? Even if there are pullbacks, we're just thinking at this stage, people are piling in, the buyers are there, the FOMO's kind of there, and you don't want to go against this market right now. Don't be a bear. It just doesn't pay, even with the little data stats over like a 2 or 3 day session. We've said that now consistently for quite some time. What about Ethereum? What about crypto markets? Well, it's held its own over the last 24 hours. You can see we haven't broken that 0.04 plus ratio, which we'll be looking at in the future. And Bitcoin's kind of slowly grinding higher, trying to get up there. It's a dull market. Wouldn't look at shorting the dull market, but holding that daily 20. Remember, crypto markets can flash crash 20, 30% with a click of a finger. So be watching that one closely. MSTR coming back with its inclusion. So this is getting included, I believe, in the NASDAQ. You can correct me if I'm wrong, but I think that's the one. And look, we still maintain the same thing. This is probably a temp high. It's going to float around and do nothing for a little while unless Bitcoin absolutely flies. Just be careful on that one if you're expecting exceptional growth out of it anytime soon. What about Ethereum? Nice bounce off the daily 20. It's exactly where we would have wanted to see a buyer. Of course, we want a new high. I want above 4K. Let's get above 4K so we can go to 4.6. We do that, I would like 4.6. And then, of course, that really gets this alt season, that ratio started. That would be fantastic to see happen. All right, everyone. Well, if you enjoyed today's video, then remember to subscribe. Check us out over on X as well. We do post a lot of these screenshots, so you can get a copy of them as well by following in the links in the description down below. And remember as well, everyone, that when it comes to these markets, I like to do a little bit of a synopsis here at the end, that you might think the inflation number's bad, but the market will just do whatever it feels like in terms of what makes everybody look stupid. One of the famous quotes is the market will do anything to embarrass the most amount of people possible. So if you've been bearish on the market over the last, couple of weeks or months or whatever, you've got to start thinking about things differently. The price action is still bullish. We're looking at dips being bought up. We don't have the weakening signs yet. Of course, we're looking for them, and I'm getting more concerned about 25. That's just the truth. We are starting to get concerned about it. But at the same time, you've got to kind of stay on the right side of the flow. So yeah, it's just kind of like all stations still go on a lot of these pairs. And remember, come from the abundance mindset. It's what we practice here on the channel. We love to talk about finding new opportunities. Thanks so much. You have a fantastic day. We'll see you in the next one. Bye for now.